Hello, this is Jordan, and this is your precious metals video market update. This video is being recorded on the afternoon of Sunday, March 18th, 2018. Thank you so much for joining me today. And in this video, I am going to discuss the current outlook for gold and gold stocks. And starting off here, we're going to take a look at a weekly candle chart of gold with a band of moving averages, and that band of moving averages goes from the 80-week to the 160-week moving average, and those weekly moving averages that range from the 80 to 160 week is roughly equivalent to the 20-month and 40-month moving averages. So that's why I like using the 80 to 160 week, because historically the 20 and 40-month moving averages, they're important for many markets, but they've been especially important for gold. And the chart also includes at the bottom the net speculative position as a percentage of open interest. Now, gold closed the week at 1312. It was the lowest weekly close, I think, since the first or second week of January. So gold looks like it's starting to crack a little bit here. There is some support at 1290, which is the 200-day moving averages, and then 1300. So that is one of those levels that's an area where the current sell-off could stop. I mean, it might bounce at 1300, it might go below 1300, and then kind of all the way to 1290 before it recovers. So those are some possibilities. If it loses 1290 and makes a weekly close below 1300, then there is a greater risk that it could test 1265. That's the blue horizontal line I'm showing there. That looks to be pretty good lateral support, and also that is right around the 80-week moving average. So there's some confluence of support in that area, but a decline down to that level, it's really nothing to worry about. The band of moving averages, I mean, this stretches from about 1230 to 1266, so I would not be worried to see a decline into the 1260s. Now, the net speculative position needs to decline more, and this is right now this is a difference that we see with gold and silver. And looking at the sentiment indicators for silver, they are telling you that silver is likely close. It's much closer to a bottom than gold. That doesn't mean that silver is going to immediately bottom, because the COT readings there have been very low. In other words, very positive for several weeks. It hasn't rebounded yet. So silver doesn't have as much downside potential in the very short term as gold does. But anyway, last thing on silver, its net speculative position is below 10% as of the last reading. Now, gold's, the last one we got was 35.8%, and that was as of Tuesday. So that last reading did not take into account that there was a 3-day sell-off in the sector. So the 35.8%, if we're doing it in real time, it's probably in the low 30s. So that's good. And when you historically, when you look at gold in bull years and in stronger years when it corrects, the lows in the net speculative position, they're typically in the somewhere in the 20s. So sometimes you get low 20s, sometimes you get mid 20s. So that can give us some context, what we're looking for, what we want to see out of the COT. And if gold does go below 1290, then I would expect you're going to see a net speculative position below 30% and maybe in the mid 20s. So that would be good. But anyway, the picture here for gold, short term over the next couple weeks, it continues to look bearish. And here we're looking at gold against foreign currencies and gold against stocks at the bottom. And in our last video about a month ago, we said the reason gold would not break out is that it was still weak in relative terms, in addition to being, silver and the gold stocks were looking extremely weak. And gold still looks weak in relative terms. I mean, gold against its foreign currency basket there, in the last couple months, it failed at the 400-day moving average 3 times. So that chart looks like it's going to decline and come down to the blue line around 55. We use UDN. That's basically the inverse of the dollar basket. So that's a great way to look at gold against foreign currencies, is to chart against the ETF UDN. So anyway, that looks like it's going to continue to trend lower. Gold against stocks that ratio had a really good pop during the equity correction in February, but there's been no follow through since that pop. The action has not looked like a bullish correction or bullish consolidation. So again, looking at gold in real terms, really more time is needed for it to strengthen in real terms and gain relative strength. I don't see it happening, in any time in the next couple weeks or so. And so what needs to happen fundamentally for gold to gain relative strength and become a leader? I mean, what needs to happen for gold to really break that downtrend against stocks? Because we really need to see that ratio break out in favor of gold. And one answer could be we need to see a breakout in long-term bond yields. And in this chart, we have gold, we have the 10-year yield and the 30-year yield. And while inflation and long-term yields have increased, they've not increased enough yet to cause problems for the economy and the stock market. And also, the recent increases that we've seen, the increase in interest rates has matched the increase in inflation. So in other words, real yields have actually increased in recent months. So that's not good for gold. I mean, the reason gold has perhaps held up well, given the increase in real yields, the weak dollar has a lot to do with it. And I also think the market is sensing, what could happen if we see long-term yields break above these key resistance levels. You can see the 10-year came very close. It might have touched 3%. It's correcting now. The 30-year yield came very close to 3.25%. Well, I think it may have touched it. That's backing off now. So for bonds in the near term, I mean, the near-term picture, and one thing I want to note, gold, it recently, the correlation, I mentioned this in the last video, the correlation between gold and interest rates, it turned to positive, I think, in November. So gold, as I just said a minute ago, it's starting to sniff out, a breakout in long-term bond yields. And I mean, that could lead to some really bullish developments for gold, but it hasn't happened yet. So it's not bearish yet for the stock market and the economy. And getting back to where we are here and now, sentiment right now, a bond, given that bond yields here, they've kind of hit a short-term top. So that means bonds have made a short-term low. And the sentiment on bonds has gotten really, really negative. So that it's going to take time for that to be unwound. So, over the next month or two, or maybe 3 months or 4 months, bonds are probably going to rally or stabilize. And so interest rates, long-term rates could come off a little bit. And so I think gold already starting to correct. It's sensing that we're not yet going to see this major breakout in long-term bond yields. But ultimately, if we see a major breakout in long-term bond yields, that will start to cause issues for government. The government, which is extremely indebted, will see interest costs will start to skyrocket. I mean, the deficit is already nearing $1 trillion, and we're not even in a recession. We're in peacetime. And in addition to that, it's also going to be negative for corporations. The corporate sector has borrowed tons of money at low rates and levered up their balance sheets. So a breakout in long-term bond yields is going to be negative all around. And I think that is something that could start to give gold, or if and when that happens, or when gold senses that's going to happen, that's when you'll see gold start to break out in relative strength. That's when the stock market will start to top out, or start to go sideways, and we'll see gold get more of a bid and gold break out. And so that's on the fundamental side. And when we see long-term yields breaking out and inflation expectations increasing, we can see continued inflationary policy, because when it affects the economy, but we also have a debt problem, policymakers are not going to want to raise interest rates as aggressively as they need to, because that'd be very bad for the economy and also be very bad for the government balance sheet. So all these things which could happen, which are super bullish for gold, they're not going to happen in the next month or two or the next 3 or 4 months. Those things look like they could be, 4, 5, 6, 7, 8, 9 maybe months away, maybe that time frame. So it's not quite time for gold yet, but it looks like we're much closer than we were a year or two ago, obviously. So we just have to stay patient here. Just let gold correct and consolidate. The major breakout is coming. I think it's going to happen later this year, but here in the very short term or in the next couple months, it doesn't look like it's going to happen. Now, ending here with gold stocks. The gold stocks they're oversold right now, but they're not very oversold. So they haven't quite hit an oversold extreme. And if we see a break below 21 in GDX, that is something that could lead to an oversold extreme. GDXJ and the juniors, they're holding up just a tad bit better. I mean, they're still dribbling lower here along with the gold stocks. So they're not going to be immune to a break lower in gold and a breakdown below 21 for GDX. But in the gold stocks, we do want to wait for some more selling, but we could see a buying opportunity develop in the next week or two. But ultimately, we do not expect the big breakout move in the sector to begin until later in the year, as we said. So if the gold stocks do hit some kind of low in the next couple weeks, that's a low that we definitely want to be buyers, but we shouldn't get our hopes up that we're going to have this massive V rebound that's just going to skyrocket. We'll probably get a decent rebound, and then we'll get another correction and consolidation after that. But again, look for more selling in the next week or so, and it could, if that happens, it would lead to a good buying opportunity. That's all for this video. You can follow all of my work at thedailygold.com, and you can go there, consider my premium newsletter. It's only $149 for 6 months. You can find that at thedailygold.com/premium. And I focus on market timing and stock selection in the juniors. If you want to know which juniors really have the goods and best potential, you can sign up for our service. It's highly affordable. We have great industry sources out there, so we know and learn which companies really have the best projects and the best people, and which are the ones that are just marketing and mining the markets, because there's a lot of those out there. It's very important for you to be able to separate between the wheat and the chaff. Again, thank you so much for tuning into this video. I really appreciate it, and I look forward to publishing another video update for you in the weeks ahead.